Hey everybody, this is James with WSTrades.com. I want to talk about some recent news stories here on the stock markets in general. One here from Fox Business saying stock market will tank in stagflation scenario, Bank of America warns. S&P already entered a bear market for the first time since 2020. The S&P 500 has gotten obliterated in a widespread sell-off this month, and the benchmark index is likely to drop even lower if the economy experiences a return to 1970s style stagflation, according to Bank of America analysts. So pretty abysmal outlook there from these analysts at Bank of America. There's another story here from the New York Times saying stocks have been falling. I'm still buying steadily. Is this a good time to buy stocks? Readers ask. Yes, our columnist says, but only if you can handle further losses and don't try to outsmart the market. Big stock market losses are nobody's idea of fun, but they have been happening this year with dismaying regularity. It's not just a bad day or a bad week. The S&P 500 has fallen 7 weeks in a row and on Friday briefly entered bear market territory. Wall Street jargon for a decline of at least 20%. If you are a long-term investor, you may not want to look at your portfolio right now. The numbers may be unnerving, but I have no choice. I look closely at this data all the time as part of my job, not just at the overall markets, but at my own returns from a portfolio made up overwhelmingly of low-cost, diversified index funds that track the total stock and bond markets. What I'm seeing is ugly. What am I doing about it? Buying more stocks and bonds through index funds. This isn't an attempt to make a smart bet that the stock market has already bottomed and is about to start a powerful rally. I have no idea if any of that is true. I'm just continuing with investments I've been making for decades. Despite the market's often obnoxious behavior, my long-term investment numbers are pretty good, even though the short-term results are painful. So a little more positive news stories here, some good points being made in this one. Then I just want to talk about this other one from Market Watch here that says the technician who called the 2020 market bottom says a shocking rally is in store. So it's talking about here noted technician Tom DeMark, who called the bottom in 2020 after COVID emerged, disagrees. The founder of DeMark Analytics, known for advising hedge fund managers like Paul Tudor Jones and Stephen Cohen, told Fundstrat's head of technical strategy, Mark Newton, that key markets are on the verge of reversing. DeMark's indicators are designed for anticipating turning points to find overextended price moves in either direction that reverse. So again here, another more positive story here from Market Watch. So I'd say there are some pretty good points really being made in all of these articles, but I kind of like this one here from the New York Times because this one is talking about not trying to outsmart the market. And, that is a great way to invest in the markets. Don't try to tell yourself you're 100% sure that this is the bottom. The market's going to reverse from here. Even if, let's just say you're trading the weekly time frame on SPY and you see a bullish engulf candle next week, we have a big rip back. That doesn't really mean anything because the next week we could have a huge bearish engulf and we could break through the recent lows that we have seen in the S&P 500. So, but I also like the idea of just buying, letting the markets move lower, buy, but don't blow your entire capital because you don't know. It could move lower where you'd want to buy again, moves lower, buy again. So as long as you're not investing in, some stock or some company that could go bankrupt within the next year, and you're investing in something like the S&P 500, the Nasdaq, the Dow Jones, your returns are going to be there over the long run because these types of indexes and financial instruments do experience volatility. They do experience crashes, corrections, and dips. But overall, if you look at these charts of these indexes or these financial instruments over time, they pretty much just rise. They have their little dips, but they just keep going up. So I really like some of the suggestions in this article right here. Let the market move down, buy a little bit, but be prepared. Markets could continue to move lower, so you could incur more losses. But if you're investing smartly and you're investing in something that is going to recover in the long run, then you don't really have to worry about it. Don't over leverage yourself. Don't blow all your capital just because the markets dump 5%, because look at us now at about a 20% retracement on something like, the S&P 500. So I thought these were some important articles, some important things to consider here. And some of these points here really rang true to me and how I like to invest in the stock markets. So if you thought any of this information here was useful, please like this video. Please also subscribe to the channel if you're not subscribed. Hit that notification bell.